Okay, so as markets are getting absolutely hammered by economic uncertainty, one legendary investor is making some really surprising moves. He's not panicking, he has a plan. And right now, we're going to break down his exact three-part contrarian playbook.
So this is the big question for every single investor, right? While everyone else is worried, what is the world's most famous value investor actually doing with his money? The answer? Well, it might surprise you.
His strategy really comes down to these three key actions. He's building a fortress of cash, he's selling off huge chunks of American giants, and he's looking for bargains halfway across the world. Let's break down exactly what this signals for your own portfolio. To really understand Buffett's playbook, first we have to see how it's already paying off. There's a huge difference between how his company, Berkshire Hathaway, is doing and how the rest of the market is faring. The story here is really one of divergence. While the tech-heavy NASDAQ just had its worst week since April, dropping 3%, Berkshire's shares went the complete opposite way, climbing a very healthy 4.5%. This isn't just a small difference, folks. It's a huge signal that Buffett's strategy is working in a volatile market. And hey, this isn't just some random market sentiment. It is fueled by incredibly strong fundamentals. Profits from Berkshire's core businesses are absolutely surging, with operating profits up 34%, and the income from his insurance businesses, well, they skyrocketed by 200%. So what's the first pillar of this winning strategy? Well, it's a defensive one. Hoarding an absolutely unprecedented amount of cash. Just look at that number. Seriously, at the end of September, Berkshire's cash pile hit a staggering $381.7 billion. And to put that into perspective, that massive war chest grew by nearly 11% in just 3 months. So here's the crucial point. With all of that cash, Buffett isn't buying back his own company's stock. And that's a clear signal. It tells us he doesn't see Berkshire shares as significantly undervalued right now. He's keeping his powder dry, waiting for a better opportunity. A fortress of cash like that has to be built from somewhere, right? Well, a key part of Buffett's strategy involves trimming his stakes in some of America's biggest and most well-known companies. Regulatory filings really show you the scale of this move. He's estimated to have sold around 35 million shares of Apple just in the third quarter alone, and he's been sharply reducing his Bank of America stake. In fact, over just the past 2 years, he's cut his Apple position by a staggering 70%. So if he's hoarding cash and selling in the US, where's the opportunity? For Buffett, the answer lies overseas. And there's one country in particular where he feels ready to go on the offensive: Japan. The evidence here is pretty clear. Berkshire is getting ready to borrow more Japanese yen, which is a strong signal he plans to increase his investment in 5 of Japan's largest Sogo Shosha, or trading houses. These are just massive industrial conglomerates, and Buffett's bet on them is already paying off. All 5 are trading near their all-time highs. So what's the philosophy that connects all of these moves: hoarding cash, selling US stocks, buying Japanese ones? It's the core of his contrarian playbook, and it's a simple yet incredibly powerful idea. This quote from way back in 2010 is the key to understanding everything. While other people are fearing a downturn, he remains calm, patiently building cash, trimming positions he feels are overvalued, and seeking out bargains where no one else is even looking. That whole mindset is about seeing things clearly when others are clouded by fear. And speaking of clarity, Buffett recently issued a warning about a very modern threat that's designed to cloud investors' judgment and exploit that very same fear. He's specifically concerned about fraudulent videos using artificial intelligence to impersonate him and give out fake stock tips. The key takeaway for all of us is to just be incredibly cautious. If you see a video, listen for a flat, robotic voice. And just remember, Warren Buffett is not giving out stock tips on YouTube, period. Ultimately, Buffett's current playbook is a masterclass in contrarian thinking. It's about having the discipline to wait and the courage to act when everyone else is panicking. So as you look at your own portfolio, the question to ask yourself is this: when others are fearful, what opportunities do you see?